Ladies and gentlemen, for the first time since March of 2022, the bulls have breached that 461 level here. As you can see, this is the down gap that was opened down back in 2022 January. So that was about 2 years ago. And what happened was we saw down gap, right? And it opened lower, and then we came down, we got back up, and the market inevitably fell, and that's what made that 2022 downtrend, right? That peak was right here at 461.67, as you can see. And part of that gap, obviously we are breaking above the peak now, and that part of the gap has been filled today, as you can see a little bit. So the buyers, the bulls, is knocking on the boss bears command center. This is the headquarters. There are no other down gaps that the boss bears can retreat to. And this is important because this down gap has been open for 2 years. So any fresh gaps, right? Any fresh gaps that could be filled quickly. You can see there's a huge down gap right here, right? It was a big down gap, just as much as this one, just as big as that one. But you see how quickly it got filled just next day or two, right? So it's not the gap that matters, it's the gap that stays open, which carries that weight. It's because of this January down gap. This down gap was never filled. And because of that, we witnessed that semi-bear market downtrend the entire of 2022, the grueling 27% correction on the S&P, 35% on the NASDAQ. And that's a steep correction. That all happened when this down gap was never filled. And you have to remember, this is important. The boss bears established their headquarters here. And they're looking to attack the bulls, which they've done for the entire year of 2022. Since the October of last year, obviously market bottomed in October, and bulls made their way back up here. And this is the first time since the early 2022. Bulls are marching back up to declare war and to dismantle and destroy this boss bears headquarters once for all.
Would you please remove any metallic items you're carrying? Keys, loose change. Holy shit! Ugh.
But the biggest question is, can the bulls finally completely fill this down gap and conquer the bears and fly to the new all-time highs? Because as you can see, there are no other down gaps remaining. This is the last down gap. If this down gap gets filled, ladies and gentlemen, bulls will find a way. Bulls will find a way to new all-time highs.
You wanna follow me? Okay. Wait, no cockroaches. Okay.
You wanna play rough? Okay.
Uno.
Say hello to my little friend.
However, if this down gap remains open, bears bring everything they got to protect this down gap. Bears might still have chance to bring some havoc into this market. So this is huge. This vicinity is extremely important for both bulls and bears. What happened was next day we saw a gap up. Pretty decent size gap up. You see this size? It's almost similar size to this January down gap there. In that process, the micro-term, short-term moving averages, they were reclaimed. And as you can see, some shenanigans we witnessed with the long upper wicks here, big fluctuations. However, the micro-term was right there to capture it. And then we saw a move yesterday, finally broke above that 459. Again, first time. Printing above 459 is the first time since the March of 2022. And we see that continuation today, closing today at 467 or 462, just about, right? 462. First time. It took 2 years to get here. I'm going to lay out the scenarios for you guys, right? But before I do that, let's check out that oscillator and see what it tells us. So that oscillator, as you can see, I'm going to zoom out a little bit. That oscillator is letting us know. That oscillator is letting us know that it's in overbought zone. Yes or no? Yes. Overbought, overbought, overbought. Yes? Yes. However, in the recent past, as you can see, when that oscillator hit the overbought, market actually did not roll over. Instead, in mid-November, November 14 to be exact. See that right there? Oscillator hits the overbought. And what happens? Market sees a huge up gap.
Perfect.
Huge up gap. And then oscillator reset it. It corrected through time as the market sort of went sideways. Retested that micro-term moving average, as you can see right there. And then it hit overbought one more time right here. And that's right here. You see that? At that time, we did see a down gap. It was a small down gap. It wasn't huge, but nonetheless, it was a down gap. As you can see right here, it's closed there. It opened here, but that was quickly filled. That was quickly filled. Again, that's why these fresh down gaps or up gaps, it's not trustworthy until they get protected. Until the longer they're sustained, the longer they're protected, the more the presence, the potency that it's going to carry. And that's important. So now we're here, right? So just observing last two occasions, here and here, when that oscillator hits the overbought sentiment. In November 14th, we saw huge up gap, big up gap. However, on November 21st, we saw a down gap, market gap down, and then retest that micro-term moving average. Keep in mind though, when we did see the down gap, right, at 455, there was no like real pivotal level, right? So it was a holding above the micro-term. As you can see, the micro-term has been riding the micro-term pretty much ever since it saw a gap up, right? You see that micro-term there, micro-term there. So though we did see the down gap, it wasn't at like an important pivotal level. And today is price action where we're at. This is an important level, right? I covered that earlier in this video, that this is the level where bulls must fill this down gap and the bears must protect it. So this is the pivotal level. I mean, bears, they have to bring everything just to protect this level. If they don't, they're done. I'm gonna lay out the scenario for you now. It's very, very important. Let's say this thing gaps up like a little bit right here. More than likely, it's gonna like go up here and then hit that the megaphone pattern resistance here, and then likely it's just gonna fade back down and it's gonna fill the gap. That's what's gonna happen. So if it's like a mediocre, like minimal up gap, it ain't gonna cut. It would have to be a big gap up. If the bulls want to completely destroy and dismantle Boss Bear's command center or the headquarters here in one blow, they would have to see a 0.6% gap up. It would have to gap above this megaphone pattern, right? So that it could no longer be bound by this resistance and then go after the all-time high level. And it needs to get above 464.54. So that way they can turn the entirety of this gap into an island up gap. If that happens, and if they manage to protect, not all of it, let's say we gap up to here, 464.50, 465, whatever, and then you start coming down, but fills half of it, but then still remaining 50% still open. That's extremely bullish. As long as 50% or more of that, maybe even 40% of that up gap, if we do see a gap above 464.50, that will be an extremely, and that gap doesn't get fully filled, that's an extremely bullish signal. However, we see a big up gap to here, and then that entirety of that up gap gets fully filled, that will be very bearish in the micro term, short term. But because this entirety of the gap is filled, the headquarters dismantled, though if that happens, we might come to 450, the worst case 450, even 456 is going to come right back up because this selling pressure is dead. The Boss Bear headquarters gone. So yeah, if it gaps up to 456.50, it fades all the way back down. That's bearish, but it's gonna be bullish in the mid to long term, bearish in the short to micro term. Right? That's the couple scenarios there. If we gap down, not a mini down gap. I mean, like mini down gaps is really not gonna cut it. It has to be a big down gap or like a big shenanigan. Like a bloodbath type of day or something like that. I could see 459. We lose micro term, 450, and we have the short term here, 450, and at least Bear's gonna try to retest this up gap. But let's say this gap is protected. We see a big downturn, right? And this gap, and we'll have to re-examine. This gap has to be protected. So there will be a battle. Let's say bears come down, bulls would have to protect this up gap to gap back up and to battle with the Boss Bears once again, you see? So these are the scenarios that you might be witnessing in the coming days. Another scenario, which I think has more likely scenario is the market continues to grind like this. We grind a little bit, we come down, and then retest the micro term once again, grind back up. We see maybe a down gap one day, but it gets filled sideways just to reset that oscillator. That is another scenario.